So welcome everyone to the Prohibition Partners Live Capital Markets in North America session on the Cannabis Americana stage. I'm Jeremy Berke, a senior reporter at Business Insider, where I cover the cannabis industry, and we publish a weekly newsletter called Cultivated every Friday. Joining me is Kim Rivers, the CEO of Trulieve, Codie Sanchez, the managing director at Entourage Effect Capital, and Michael Sassano, the chairman of the Ireland-based SOMAI Pharma. So welcome everyone. Thanks for being here. With this all-star lineup of experts, we'll be discussing the cannabis industries and the broader world's challenging year and where we all go from here. While there were some bright spots in the recent crop of cannabis earnings, looking at you, Kim, the industry's past year was marred by massive stock slides, tanking valuations, and layoffs, unfortunately. But that doesn't mean it should be left for dead. Most experts in the industry I speak with, and I speak to a lot, say there's a rebound coming. But how do we get there, and who will benefit from that? What has to happen now? First, I'd like to kick it over to the panelists to quickly introduce themselves, and then let's get to it. So Kim, since I mentioned you, why don't you start off?
Thanks so much for having me. Kim Rivers, I'm the CEO of Trulieve Cannabis Corp, and we are a publicly listed, vertically integrated cannabis company with operations in the US. We are predominantly in Florida, where we just opened our 48th location, but we also have operations in Connecticut, California, and are looking to launch in Massachusetts soon. So happy to be here.
Thanks. Codie?
Hi, I'm Codie Sanchez. I'm a partner at Entourage Effect Capital. We're one of the private equity and venture-based investment firms in the space, been around since 2014 and invested just over 150 million in about 65 cannabis companies. We didn't get to invest in Kim, but that looks like we would have loved to. But there's lots of other names around, from Canopy Growth back in the day to GTI, among others that we've been lucky enough to participate in their growth.
And last but not least, Michael.
Hey, good to be here. My name is Michael Sassano. I'm a founder of Solaris Farms in Nevada, where I'm coming to you from, and also founder of SOMAI Pharmaceuticals, a European-based cannabis company.
Yeah, thanks everyone. So let's get to it. Obviously, COVID and the coronavirus crisis is the biggest news of the year, I would say, despite what's going on this week here in my hometown of New York. So just to get out of the way, maybe Kim, you can take this question and start it off. How has the coronavirus crisis impacted your business? And how have you seen that impact both in your share price and in your day-to-day workflow?
Yeah, so I feel like that question can take up the remaining portion of our time here. So I'll try and keep it high level and succinct. But really, it's a pivot. And one thing that we say is that the only thing constant in cannabis is change. And those changes are typically driven by some sort of external factor. And look, COVID-19 is kind of no different in that vein, I guess. But what we saw on the ground is we saw, of course, massive shifts in how our businesses are perceived. So first and foremost, I would be remiss to say that I can't overstate the importance of our company as well as others being deemed essential on the federal level. So cannabis businesses, all of a sudden, you have illegal businesses federally that are deemed essential at the state level by governors, and which I think is propelling the conversation forward in a more expedited fashion at the federal level, which we can, of course, talk about. The second, I think, big thing that we saw is the ability or the necessity to be able to flex and pivot to meet customers where they want to do business with us. And so similar to other retailers that were able to stay open during this time, we saw a huge swing to demand through delivery channels, through in-store pickup channels, of course, our e-commerce platform needing to rise to those challenges from a volume perspective. And then, of course, our walk-in business significantly declining over that same time period. We had to make immediate changes with respect to how we've dealt internally with our employees, making sure that health and safety, of course, were on our top of mind first and foremost. But what we did see also in that essential designation is that the patient demand growth during the time. And so while it's a bit difficult to talk about, we'll say the silver lining, I do say that it did feel like we were living in kind of a counter universe to a lot of other industries, and that while other industries were hunkered down and slower and dealing with furloughs and layoffs, we instead we instead saw a very rapid increase in demand. And what was interesting in the markets that we operate in is that, dissimilar from other pantry loading activities. I mean, we live in Florida, so it's a hurricane dominant state, for better or for worse. So in those patterns, what we see is a high increase of pantry loading, and then that's followed by a precipitous decline in spending because customers have already preloaded their baskets for a time period. Different during COVID is we saw that increase and we saw several spikes through the period, but we didn't see that corresponding decline. So in other words, patient demand, customer demand came back to that upward and to the right trend line that we're so fortunate enough to participate in the states in which we operate. And so what that signals to us is that consumption during this time period has potentially increased. I think to be determined in terms of how that settles out over time, kind of coming out of COVID, and whether those trends that we saw again towards delivery, towards in-store pickup, are going to rebound back to kind of pre-COVID levels, or whether they stay where they have been.
Yeah. And Codie, can you talk about the impact that COVID has had as an investor? Kim has a very good operator perspective, but investors sometimes are looking at different things. So can you talk about how that maybe has impacted your strategy for A, your fund, and B, for some of your portfolio companies?
Sure. So, first talking to portfolio companies, I think it's very similar to what Kim outlined. One of our portfolio companies, Akerna, noted a 78% year-over-year increase in overall cannabis sales. And this, was following a very high triple-digit increase in cannabis sales initially when COVID sort of stockpiling happened. What was also interesting, and some of the data that we're tracking, are net new consumers. And so is it just that consumption is up, which would make sense in a world ridden with anxiety and, less social interaction, of which cannabis tends to be relatively, hard to do in public spaces until we have consumption lounges, et cetera. But I think that the net number of new consumers is something we've been trying to track down really good data on that across the ecosystem. It's hard, but we would probably estimate that we've seen something in California, at least, of 150% increase in new consumers who have never, at least legally purchased cannabis before that we could track. And so that's interesting and great for our portfolio companies across the board. We haven't seen the, rush to decrease the amount that individuals spend on each type of product. So typically in recessions, you see people are going for sort of more value plays. That actually hasn't played out completely yet. At least on an average across the space. That, I imagine, tends to happen if we continue forward. But it's been very interesting with the stock market at all-time highs, back and forth, and simultaneously, this infusion of capital by the government. We haven't seen that traditional recessionary environment in cannabis purchasing. But what I will say as an investor is, liquidity has dried up in a way that, in cannabis we've seen since 2019, but it is now on steroids. And so, if we thought that there was a lot of illiquidity pre-COVID-19 and now pre sort of social unrest, I think that's accelerated dramatically. And so that's very tough for portfolio companies because they need access to capital. And increasingly, we're seeing people make intelligent moves to debt. We're seeing people make intelligent moves, in that, their stock prices are stabilizing, maybe moving up slightly. But what we're not seeing for private companies, which is our bread and butter, is them being able to have access to capital. So if there are investors listening out there, it's an interesting bifurcation in that as an investor, this is exactly what you want. We specialize in distressed companies, which is how we put together our team. So we were sort of waiting for this resettling and normalizing of prices in cannabis companies, and it's happened. And so, we're working right now on 3 really large distressed deals that pre-COVID-19 and let's call it the sort of cannabis pullback, we would not have been able to do. So if you're looking to invest today, I'm not sure there's a better time in cannabis. There's some great data out there by BDS Analytics and ArcView that show direct correlation between the 99 stock bubble and the cannabis resets in the market. And so I think that's the opportunity today is if you have capital and you understand the world that Kim knows all too well, which is how difficult these companies are to operate, it is a great time to be an investor picking up assets that companies simply cannot continue to operate.
Codie, can you drill in on the shift to, say, regular VC equity investments to distressed? And how does that change how you think about a deal and the type of companies that you're looking at?
Yeah, well, I mean, if you think about the industry, we're all children, right? Nobody in this industry is full adults because really the industry has only been legalized for a short period. And so if you think about it from a maturation cycle, we started investing as a fund in 2014, but had plays in cannabis as early as 2013, 2012 individually. And those first moves in the space were venture style investing because there weren't long-standing companies that were distressed, that were legal, that people could come into and do turnarounds and actually, make more efficient and operate. And that's sort of what distressed investors and turnaround experts do. And so that really didn't exist. It would be like in 99, you trying to go to a bunch of .coms and tell them that you want to, buy them for significantly lower valuations and turn around a company that doesn't yet have any profits or anything for you to turn around. It just is an early stage of the industry. And that's changed, very much since 2014. And what we've seen is, there's a lot of hot money coming into the space pre-2019. And a lot of speculation, which we humans love to do, and none of this is new. We do it in almost every single emerging asset class that comes on board. And so now the change is really, for the first time, I think, since probably 2018, 2019, we can start doing distressed deals. And I'm not sure yet that all cannabis companies really understand what their valuations should be if they're not operating at the highest level or public, like Kim and others. So I don't think we're quite at the bottom yet for private cannabis companies. I think there's a little bit more, unfortunately, highs and lows there. But the real difference is, in my opinion, if you are a passive investor in cannabis private companies, and that means venture style, then I think you're in trouble in this environment. I do not think you can be a passive investor in private cannabis companies. I think you have to be active. And in that space, that means turnaround, distressed, and being super hands-on with how the companies run.
Yeah, thanks, Codie. Michael, I want to turn to you to get the international perspective on the public markets. We've seen Canadian companies struggle in recent months and almost years now. I'll lay the question to you simply with your international perspective. Is Canadian cannabis over, and are we switching to the US?
Well, I mean, as an investor in cannabis and an operator of my own grows, you have to look at it from the perspective of we've been developing the markets here. Solaris Farms is in Las Vegas. And I decided rather than get into other markets, it would be a lot more easier for me to start off in Europe, where it's pretty much just like any brand new state that you saw, whether it was New York back in the day. Europe's just a starting market. So the cash we had over there, we decided to just go for it during this time because our projections aren't until 2022 to start making some real money anyways. Europe's just starting out. The regulatory framework is completely ambiguous. Just like states back in 2014, 2015, as they were just starting to come online. Colorado had been there, California had been there. So too, you would call Germany, the pioneer. But the reality is they've done $225 million worth of sales. That's roughly retail sales. So that's roughly 12,000 kilos of product, which is insignificant if you look at the U.S. market. I mean, when comparing the U.S. market, I mean, most people are putting, their money to work here because it's a $12 billion market and growing. So, but as a private company where we're investing our own money and investors' money, the opportunity there is a lot bigger. Even here, we were able to pick up a few dispensaries during this time, and make action. Over there, we're just building we're in planning. We're getting our license in Portugal. We're getting our license in Greece. And we're doing a very low capital spend because the market is not as attractive right now. And we'll do like we did in these states. We'll scale up slowly, preserve our capital, and probably put more money into the branding of these products rather than just front loading and making a Taj Mahal greenhouse and production facility, and see how the market goes. But the look from Europe is slow moving. Nothing's going to happen till late 2021. Nothing actionable. Investment premises is solid for this time, next year, and the next year until we get a clearer view of what's going to go on. And you just want to plant the small flag over there.
Yeah. And Michael, just a follow-up to that. I mean, what are some of the more exciting markets in Europe for you? And what are some, for those who aren't aware, legislative changes coming down the pipeline that will open those up?
The whole Europe is the market you're going for. You're going for the 640 million people cross-border over there. You have the Canadians that have been trying to sell to Europe. That was part of their investment premises back when they started to build these large facilities. You see the sales just aren't there. You have Tilray over in Portugal. That's a very cannabis friendly country, but you don't need any. It's not like the United States where, if you were one of the lucky lottery winners, to get a state's license in a state like New York or a state like Florida or, Europe's Portugal and Greece. This is more like Oregon and Washington and California. Anybody can get a license over there. So, everybody is getting a license there. So there'll be a lot of infrastructure built by people that don't know what they're doing. They've never been through not just a cycle. They don't even understand, how exactly to grow. They're making the same mistakes that a lot of American companies made years ago, where they're hiring consultants. Okay, this guy must know how to grow. This guy must know how to do marketing. But barely any of the presentations I've seen, from other competitors show that somebody was an owner operator of a successful operation of some significance of size. Yeah.
Kim, I wanted to turn to you, looking at a trend that we've reported on a lot in recent months. We've seen a lot of American companies go from the MSO model to the single state operator model. Why, in your view, is that a lucrative shift, and why is that the right shift to make right now?
Oh, how the pendulum swings. So for those of you who aren't as familiar with Trulieve, we have about 90% of our operations in Florida. We also have been profitable since 2017, running at about 50% EBITDA margins. We finished last quarter with approximately 96 million in revenue, and again with about 52% on EBITDA margins. So I think that as the industry matures and as the conversation matures, I do think that there's a natural evolution to focus on profitability and to focus on, again, those common metrics. But I think that a more practical reason is that, quite frankly, these companies need to make money internally, and they need to generate internal profits to sustain growth. As was mentioned, capital markets have definitely shifted. I think last year was a wake-up call for many companies who have, spread themselves fairly thin and have significant capex and growth plans. Yet now the capital markets, which were previously funding those plans, have retracted. And many of those companies found themselves in a situation where their overhead was high, their burn rate was perhaps higher than their ability to generate internally, and then they were forced to play in the debt markets, which for many of them, quite frankly, weren't overly friendly. Because of our status, as we all know on this panel, too well, and personally too well, it drives me crazy. The ability for us to access, I'll call it normal term debt, is few and far between. And so to put it in perspective, right, Trulieve did a public debt offering last year, and that we were able to secure 9.75% from a rate perspective without a convert add-on, and that was considered one of the best priced deals in the cannabis space. And that is with the metrics that I just gave you with respect to our profitability and the strength of our company. And so many companies found themselves in kind of, I call it fondly loan-to-own situations, where they set themselves up for potential takeovers or kind of get themselves into more of a hole from a performance perspective. So I do think that shift then has come externally. So shareholders, right, investors are asking, okay, what is your path to profitability? Are you there yet? How soon are you going to be there? what is your free cash flow, and if you don't have that yet, when is that coming? And just again, focusing on fundamentals, which Trulieve is a company that has always been focused on fundamentals, and we have said from the very beginning that we're building this company in a sustainable way. And that, we look at it that when those barriers come down, when we have the ability as a company to access more normalized banking tools, more normalized debt rates, we're going to be in that much better of a position. But we're certainly not going to put our company or our investors at risk between now and then. So a single state or a smaller portfolio focus allows companies to basically focus on those opportunities that can lead to profitability. There are markets in the US, and this is absolutely true, and I think folks are becoming more and more aware of this fact, that there are markets in the US right now that, due to regulatory restrictions, it is impossible to achieve profitability. So that's just hard stop, right? We don't talk about that. We haven't talked about that as an industry, but we're starting to talk about that. We certainly talk about it internally, and we all have our models, and we all know generally what those states are. However, because the pressure initially, because you were compared to the Canadian companies, where it was just looked at as a universal landscape, and that was the investor pool that we were in front of at RTO, right? When we were going public, we were in front of that same group of investors. And we can talk about the limitations that we have in raising capital as it relates to that investor pool, which is starting to shift, but has not shifted, dramatically as of yet. So we're in front of these investors who are used to a landscape that is very different than U.S. cannabis. And it's a homogenous landscape. So there aren't differences from province to province, right? And it's all about capacity. It's not about brand. It's not about marketing, because that's not a reality in Canada. And then you're asking those investors, okay, come over to the US. We need to focus on brand. We need to focus on distribution. But by the way, you also need to run 50 different models, because it's 50 different countries that you're investing in. And it's not until just now, again, kind of 2.5, 3 years into this, that analysts have done the work, in my opinion, that have gotten sophisticated enough to really be able to distinguish opportunity to opportunity. And from a company perspective, what that translates into is, initially on the road, this was my favorite question: where's your map slide? Where's your map slide? How many dots do you have on the map? Because clearly that's going to win. Well, we all know, let's be real, that if you've got a map in California, that does not mean that your addressable market is the entire state of California. Right? But that is how that conversation was happening early on. And so we see companies that had this very broad strategy that were, banking on the fact that the capital markets were always going to be available, that they were going to be able to continue to fund operations from the capital markets, and that really reaching profitability was an afterthought, because this was a growth industry similar to that of tech. Okay, so instead of focusing on bottom line profitability, we're going to use a different metric, whether it's addressable market, which I lovingly, refer to as how many engineers do you have on staff, which, if you remember, that was a favorite tech measurement tool. And what's happening is that folks are realizing, and I think that some other industries have forced this realization. So when you look at the WeWorks of the world, to a certain extent, when you look at the Ubers of the world and kind of what's happened there, that, oh my gosh, this is a highly regulated, very market specific business. We can't assume that what works here is going to necessarily translate here. And we really need to dig in and understand what the metrics are for each particular market. And companies are doing that, and companies realize that we need to make money so that we can sustain our operations, and we can continue to grow those operations. And so therefore, by focusing on those states that allow for and that are more conducive to that growth and that profitability, makes the most sense strategically. So that's a long way of saying that it certainly is nice to not have to defend the fact that we don't necessarily have a map slide. We never have. We're focused on building a company strategically through penetration and through brand building over time. And we're proud of that strategy, but I think that it's just those realities are coming home to roost in a lot of companies across the US and with the investor community.
So Kim, I think you hit the nail on the head, and actually it's a perfect segue into my next question. In the early days of cannabis, that was not that long ago, maybe 2016, 2017, it was really retail investors. So these are private investors looking at investing in these companies for a lot of complicated reason. Institutional investors weren't very much able to invest. As an operator, how have you seen the shift from retail towards maybe more structured funds get into companies, and the things they're asking of companies change? Maybe it's a focus on profitability, or as you mentioned, a focus on states where they can actually make money rather than planting a flag around the map. But how have you seen that shift in your time running Trulieve?
Yeah, so I mean, I think, look, is the investor pool as deep as we would like? The answer to that is no. I think that the real catalyst there will come, of course, as we all know, when we're able to uplist into a U.S. exchange. That being said, there certainly have been changes, and I think that those changes will continue. We certainly are seeing a greater level of interest in having conversations with again more robust and better known funds, both in the U.S. and abroad, quite frankly. And in those conversations, as opposed to a typical retail investor, or even some family offices and hedge funds, where really it's all about velocity and it's definitely more of a short-term view. We are, finding ourselves in conversations that have a lot more depth to them, that occur over several meetings prior to an investment being made, that really want to understand our business and our strategy on a deeper level. Whereas before, it was, what have you done for me lately? I want to value this on a growth multiple that's in 2 to 3 years out, right? Top line, oh yeah, EBITDA is nice, but that's not necessary, right? We're revenue driven. So I think that focus on margin, I think that focus on certainly on EBITDA and profitability, free cash flow, is certainly a metric that we're being asked about a lot. And then additional traditional retail metrics. So same store sales growth, right? Customer loyalty metrics. What is our inventory management strategy? How are we thinking about customer segmentation? I mean, again, all of those conversations that as an operator, we love to have those conversations and talk about, but we're quite frankly not part of the discussion really at all early on in early days. So, but to that point, I think that if we can get safe banking through, I think that will allow for another group potentially of investors to come through, as we think about whether or not that frees up some folks' ability to get cleared through their own compliance departments, which of course is a hurdle for many. And then of course, again, being able to have a listing on a U.S. exchange will be, we think, of course, a large catalyst for the industry.
Sure. Codie, I wanted to posit that question to you as well as an investor. Obviously, you've seen the whole gamut shift in your time as an investor. So how is the makeup of the investors, both A, in your fund, and B, the people you compete with on deals for portfolio companies, changed?
Yeah, well, I mean, our LPs when we first started out were largely ourselves and, other ultra high net worth, a few family offices in the first fund, but we were all quite private. I mean, our team all comes from, big distressed companies and, traditional investment banking and private equity. And so we were a little nervous in 2014 to be super public about the investments that we were making in the cannabis industry, I think like many others. And, and that's really changed. So now this will be our third fund in the space, and 3 additional sort of co-investment vehicles we've had, and the LP makeup is completely different. I mean, now we have registered investment advisors in it. We definitely have multifamily offices and family offices. We have an individual advisory LP board that consists of, if I said the names, they're from some of the biggest companies out there in tobacco, alcohol, pharmaceutical, nutraceutical, CPG, and they're actively looking at our portfolio companies for acquisition and also to try to understand the industry and where they can best fit within it. So I can very safely say in 2014 that was not the case, and that has changed really significantly over the last year. I mean, the one thing I know about other investors that are not in the cannabis landscape is they don't have the hype and the feel of urgency that they need to get into this industry that a lot of retail investors felt early on. They've been very patiently watching what's been happening in cannabis, and we have private equity funds that invest in things that have nothing to do with cannabis that are LPs into our fund, because they're now starting to see that they can get in at one of the lowest points from a price perspective of the industry. But I don't think they feel a huge rush to do so. I mean, we're seeing small dollar amounts. And what's interesting is, of all the funds, so let's say there are like 7 to 10 funds that are active in the space. I think there's less probably that have over $100 million, and maybe there's only 5 or so that have around $200 million and more. It's tiny. I mean, we're talking about less than $1 billion in private equity or venture capital funds allocated to cannabis. And so, and what's amazing to me is, as I've seen this industry, and we know all the other funds in the space, we do a lot of co-investment deals, which I think is really important because, cannabis, there's a lot of fraud that can happen and has happened in cannabis companies. You have to have a massive amount of corporate oversight. If you're not taking over the company entirely, you've got to know that the other investors on your cap table actually know what they're doing, so that if something goes awry, you can be there to assist. And so we know all the other players, but what's astounding is how many of the LPs inside the fund landscape are shared. And so that you could say on one hand that that's, unfortunate, and you could look at it from a negative standpoint, but on the flip side of it, what that tells me is the amount of capital. If it's true that there's $4.7 trillion in cash on the sidelines from institutional investors and retail investors, and we really in cannabis only have in the private markets, let's say a couple of $1 billion, maybe tens of billions of dollars invested in these companies, we have a huge arbitrage opportunity for the moment that we start to have some of these investors come into the mix. And so, Akerna, one of our portfolio companies, just got listed or is going to be listed in the Russell 2000, which is, a public announcement. That means an increase of 700,000 shares trading. And so, to Kim's point, once we have more people that are able to have access to indices and to list on exchanges that are more normalized, this industry is going to see a binary trade jump, I think. But I will say, for all of us that are building companies right now, my preference is I'm perfectly fine if we have another couple of years without legalization fully. Do I want decriminalization, and do I think it's wrong and really tragic that we have people incarcerated for this at the same time that we're profiting? Absolutely. But as investors in this space and as operators, if we have a few more years before all of our LPs and the investors we see on the institutional space want to get in, we're going to make a lot more money. And so I think there's pluses and minuses to both. We could legalize faster, and that would be great, and we would do well because of that. But if we have a few more years to build a moat around our businesses, I think we'll be even more profitable.
Yeah. Codie, can you talk a little bit about how you get some of your LPs comfortable with investing in the cannabis industry, whether it's plant touching, i.e. a company that sells THC directly, or ancillary pick and shovels company, and how do those conversations go?
Well, ancillary is a lot easier,
Sure.
but the truth about that is those companies haven't really been the ones to make the actual profits for us or from themselves. So, we've seen a lot of people who had funds that were non-plant touching funds, and they definitely had nothing like the returns we had by investing in multi-state operators or investing in individual entities not dissimilar to Trulieve. And so if we would have been not plant touching early on, there's no way we would have had the 3 to 5x that we've had in the first 2 funds. And so you have to, in my opinion, if you're going to take the risk on cannabis, I think debt is not the right vehicle to do it, because I don't think you have the risk return profile that you want in this state, and you can't do the bankruptcy proceedings and overall restructuring that you could in other industries. And so I think, you need to be in equity, and I think that's a differentiator. And so how you get them comfortable is really, one, I say don't do plant touching, in my opinion, as your broad only strategy. Why? Because that's not where the historical return has been, and there's no moat around that business. Other investors can come into ancillary companies, and so you don't have the ability to take advantage of the fact that you have an unfair advantage if you are into plant touching companies. And so that's my first step. Then when I say, okay, non-plant touching companies, in my opinion, you can have some of them. We do have some and that have performed well, but you need to have some plant touching. The second thing I talk about is always we go to history. And I'm sure Kim could commiserate with me here, but you have to have a huge education process with investors. I have never been this public in my life as an investor. And the reason is not because I like seeing, this all over everything. I'd much rather be inside of my spreadsheets or working with companies, but we have to educate these investors in a way that you simply cannot do by being quiet and behind the scenes. And so, what we've realized is we have to get out there. We have to show them that, the stigma is not exactly what they thought it was in the 60s and 70s. And that means, if an average investor or LP takes 7 times, contacts to close, let's say, I think in cannabis, you're looking at 20, 25. You want to have innumerable phone calls and engagements with investors in order to get the big institutional LPs comfortable. And then the only other thing I'll say is your operational efficiency as far as our data room, our back office, how we explain how we actually run and operate our business, even as a fund, has to be at a level that is a multi-billion-dollar fund would be at, because they're so worried about cannabis overall. If you have anything that seems unprofessional, or you have any third-party service providers that you utilize that aren't top tier, the LPs are not coming in.
Thanks, Codie. Since we have only about 10 minutes left, I wanted to turn to the legislative question. With the framework and the increased urgency of the push to legalize cannabis, with the Black Lives Matter protests that are going on, and some of the concerns around police brutality, rightfully, cannabis legalization has come up again in more mainstream political circles. Michael, I wanted to turn to you. I mean, if you had to weigh, a future Trump or Biden administration being friendlier to cannabis and cannabis legalization, can you weigh in on that for me?
I try to stay as much away from politics as I can.
Take a stab at it.
Look, they're both bad for cannabis. So that's my opinion on it. Biden, he still wants to do more research, even though there's been no research since the 50s to approve the theory that cannabis, whatever their reason for banning cannabis back then was. And Trump's just against anything that he thinks is liberal. So, I don't see either of them being beneficial to us. But hopefully they see that before COVID, the cannabis sector was one of the larger percentage increase in the United States employers. Hopefully they see the benefit of having all the economy pumping on all cylinders. But if they can't even get to banking, I'm not even sure where to go with that.
Yeah. Kim, what about you as a CEO? Is there anything you're weighing there that, anything that you see that maybe we don't?
What I can say is that I think it's about incremental change, and it's about incremental, incremental change in the conversation is what I would say. And I think that's just with legislation, period, particularly when you're talking about something that's this much of a policy shift. It's mirroring what we see on a state-by-state basis. What I have found encouraging is that I would say that as an industry, our seat at the table and our access and the request for us to be a part of the conversation in a meaningful way has certainly shifted to the better. Which I think is an important sign and an important step as we think about those policies and how those policies could and should change over time. Clearly, top of mind right now is safe banking, since we were able to garner the support in the House and include banking language in the next relief package, which is now in front of the Senate. There's a lot of work that's being done behind the scenes there. And what I can tell you is that there's a lot of substantive conversation that's being had, which I would say a year ago, that conversation wouldn't be at the same level that it is today, where we're talking about actual merits of specific language, et cetera. Previously it would have just been brushed aside and said, oh, it's that crazy cannabis thing again, right? We're not going to spend any political capital on this issue. And that's really what we've been battling. And I think it's the same to your question with respect to the presidential, debate. I'm thrilled that cannabis is on the stage, right? I'm thrilled that that is an issue that either candidate is required to weigh in on and to share their opinion on, right? That to me is a huge step forward where we haven't previously seen that on the national stage. And so, I do think that, again, while would all of us like to see this happen more quickly, of course, do I think that it is going to be incremental and measured? Yes, but as long as we're continuing to move that ball down the field, right, we need to take advantage and be well positioned to take advantage of any and every opportunity that comes at us. I think COVID is one such opportunity, quite frankly. We'll see with respect to where the current environment around Black Lives Matter, how that shakes out. I do believe that we can all be doing better with respect to how we talk about and how we act upon those issues. And I, for one, am certainly taking this opportunity to look internally at our organization. I know fellow CEOs are doing the same, and that's really important. And it is important for us to make sure that we are on that stage and using our voices and using our platforms as advocates for those communities in a very real and meaningful way. But, I think that with respect to, look, I don't know that, quite frankly, a president, even if a president declares that he or she wants to see cannabis legalized, right? It takes also an act of Congress, and it takes other actions and other agencies to work together on that. So I think that the biggest thing that we can look for, we can hope for in a president is just don't get in the way. And I think that on a state-by-state basis, we're going to get to a point where there's so many states that have some form of cannabis legalization and that need the revenue and that could benefit from the economic drivers that we provide as an industry, that voice is going to kind of overshadow. And then if we can just not have a no in the White House, I think that we have a potential shot to continue to move that ball down the field.
Yeah, thanks, Kim. And Codie, we just have a few minutes left here, so I wanted to give you a shot at that question. Do you think or anticipate a Trump or Biden administration being friendlier to cannabis, or how do you see legislation like the Safe Banking Act panning out in the next congressional session?
Yeah, I mean, I think we accelerated just about every trend that was already in existence with COVID-19. And I think that's the same thing with cannabis. So, the movement from essential to illegal in a matter of a couple of weeks. And then, I think also the fact that we've seen very predominantly conservative and anti-cannabis states and counties and cities, such as, Anaheim is legalizing cannabis, happiest place on the planet now. And so I actually think we're going to see legislation happen faster than we thought. I'm relatively agnostic to which candidate actually wins, because to Kim's point, I think either one of them seem to have some aspects for and against cannabis. One thing I do think is, important is, there's a saying like, how do you win a Nobel Prize? You know what to ignore. And I think one of the things we do in cannabis too much is we try to postulate on legislation, and we try to postulate on legalization and when it's going to happen. And then we don't focus on things like our EBITDA, our profitability, the margins that we have, and executing on our business day to day. And so, I try to tell all of our portfolio companies to have blinders on when it comes to legislation. Most of them are not big enough to affect the outcome. And so worrying about it is not really worthwhile. The only thing that I can actually see happen is that we get surprised on the upside, and it happens faster than we think. And if that is the only real, issue that we have, then you just have to make sure you're prepared for the fact that it could legalize faster. I think there's very little chance that we have a rollback in cannabis legalization thus far.
Good answer. Let's wrap it up there. I want to thank Prohibition Partners for bringing us all together. Michael, Kim, and Codie, thank you for coming ready to answer questions. And I really appreciate you all joining me for this discussion.